Hey guys, this is Kunal from TradingSim.com. I wanted to do a video on this Tuesday night. I'm going to cover a trade setup or basically a trade correlation between the UVXY, which is the Ultra Vix short-term trading vehicle basically it's a leveraged VIX if you want to call it, and how that correlates to the S&P 500. And I'm going to use the S&P spiders as the proxy there. I think this is an important video from the standpoint, a lot of you guys are out there, you're trading this Ultra VIX with the expectation that it trades in the opposite direction of the S&P 500. And so, you guys got to be careful with that assumption. And so that's kind of what I wanted to talk about today. Today, you can see this VIX the Ultra UVXY has been going down since February. It's had reverse splits a couple times, and there's some decay built into it. So just over time, this thing can go nowhere but down to zero. And so, but on the short term, especially when you see volatility, you're going to see spikes in this thing. And so if we just pull it up to the last couple of days, you're going to notice that this especially with Brexit, right? This is going back to June the 10th. Going back to that area, we went from about 9 up to about 17. We almost did a double on this thing in a couple of days, especially with Brexit and the volatility surrounding that. So you can tell by this chart that in this time period there's some heightened volatility in the marketplace. But when the markets do start getting volatile, a lot of guys want to use this as a vehicle to essentially go long or go short the S&P 500 and do it with some leverage, and that can be a dangerous thing. And so we're just going to walk through an example of how that can be the case. So let me just go back here. So what had happened is before Brexit came out, we had a move up to around 1675 on the UVXY. It came all the way down as the market had rallied, right? If you recall, right before this big drop down, we had a pretty good ramp here. Of about 50 points on the S&P in a couple days in anticipation of Brexit. And when that occurred, we basically had a move down on the UVXY. So there is a correlation to be made in many cases, but when you're looking on an intraday basis, when you're day trading, this can be a flawed correlation. And so let me just move down. Well, before I do that, what I want to point out is this day right here, when there's this big gap, this was the crash day. And so even with that crash, this big move down, the Ultra Vix could not get above its previous highs down here, which correlate to these lows on the S&P. So that's telling you right there, even with all that volatility in the market, this thing couldn't get going. And so we want to have a bearish posture on this, and again, I'm not saying you should have a bias towards the bearish side, because I'll be the first one to tell you you should never have a bias in trading, period. Especially if you're day trading, you should trade what you see. But this is telling you something, right? This is a divergence here. We're seeing a big spike in volatility, but we can't take out the levels that were just there from a couple of days ago. So that should be a telltale sign. So essentially, this was on the crash day. So now I'm going to start the simulation, which will kick off the Monday, which was the 27th. And what we're going to see here, right, the S&P gap down again. And you can see the UVXY is trying to go after its Friday highs, and it took them out. And let me just move this to a 5-minute chart to better illustrate what's going on here. Right, so we've taken out those highs. And in the meanwhile, S&P just keeps taking it on the chin here. Now keep in mind, right, we had resistance back here at around 17. This was a big area, give or take, right around there. So we want to definitely be aware of what the price action does when we get up to that level. You know, at this point the S&P is tanking. You know, you can see it's a straight shot down 30 points right now. Price is fully contained by the 9 EMA. None of the swings are being taken out. It's pretty bearish at this point. It does look like, you know, we could have this bottoming formation coming into the 9 EMA, so let's just see what happens. Right, but this should be an immediate sign to show you that the VIX, the volatility is starting to drop out of the market. And so our expectation is that as the market goes lower on the S&P, the VIX should go higher in proportion. But that's not happening. And so we had a 30-point drop in the morning on the S&Ps. Actually, it's about a 40-point drop. You know, we closed at 2032 on the S&P, and we went all the way down to 198.65. So that's actually a gigantic drop from the previous day's close. And you can see here it's already down. You know, it was down 43, 45, 50 points, and the VIX couldn't take out its previous day's high. That's just no good. So what started to happen here, right? We put in this little bottom on the S&P, busted through the 9 EMA, and let me just pull some volume up here, because I feel naked without volume on the chart. Okay. I'm just gonna okay. So we had some decent volume here. It wasn't anything crazy, but you know, we're going to be looking to see where this thing tops out, and that'll be where we think a range will be set. So we have this low down here, and wherever this stops, we're going to set up a range. If that low gets taken out, then that range is violated, obviously. So now what we've done is, right, this previous swing of about 199.91 was taken out. It broke 200 on the S&P, or this SPYs, and you know, what's happening here is that UVXY, right, coming back to this previous resistance, which is turning into support, which you can kind of correlate if you turn this thing upside down. What we want to pay attention for, and the reason why I'm making this video, what you want to pay attention for is the divergences in that correlation. We've already seen one big divergence. On a daily basis, this thing could not take out the previous highs on the UVXY, and that's a big divergence. And so as the S&P continues to, you know, move a little bit higher, this thing keeps going lower. And now what we've done, and if any of you have traded this specific trading day on Monday, you would have realized that it was absolutely brutal from a trading perspective. There was lots of chop. The S&P was just whipping up and down. It was a very, very difficult trading environment. I just couldn't get it going on Monday. It was just too much chopping. But now what we've seen going on here, we've broken this support area. This is no longer support. And what you can kind of see here setting up is, you know, a topping formation. I mean, we basically had this mini head and shoulders, if you want to call it that. You know, neckline's right around here. But there's also some levels right here. This level is essentially tailed there 3 times now. And so what we're going to see the rest of the day is we're just going to see, like I said, this chop. Now, what has the S&P done here? It's taken out this previous low, which corresponds to this previous high. What has the Ultra Vix done? It has not taken this level out. It's actually lagging. And what do we do there? We failed there again. And S&P just keeps going lower, as you can see here. Right, we have one low, you know, right here again. And let's just see where this goes. Right, look again, we're taking that we're stair-stepping lower on the S&P basically. It's a level here. Right, we have 4 consecutive lower lows on this thing. And what has this done every single time? You know, it's just topped here about 1, 2, 3, 4, 5, 6 times roughly. And so you can again see there's a divergence setting up here. This thing cannot take this level out. It's a major resistance area. This market just keeps going lower. Eventually, when the S&P, your assumption needs to be that when the S&P catches a bid, you know, this thing's gonna fall off the cliff, and that's kind of what's setting up. This sideways chop is killing volatility, and that's what this is telling you here. So from a trade perspective, this is a setting up as a great short, right? Because you just have your stop right above this, you know, 16 area, which is the high of this area, this whole cluster right here. And there we go. We tried once again, completely failed. We went to 1585 this time. Market again set a new low. It's testing the lows of the day. So the expectation here is that, you know, this thing's going to break down. And that's exactly what it did. S&P caught a bid. You can see a big ramp here on this bar. And you know, all we've done on the S&P, right, is we've just traded at this range the entire day. This was a range from 198.65 all the way up to 217. So it's about a 5-point range on the S&P. Oh, I apologize. It's not a 5. It's about a 20-point range on the S&P. And you know, you can imagine there's just chopping all over the place here. This is just brutal. It's a nightmare to trade this. But you can see here we haven't taken out these highs on the S&P for the day. The VIX has just tanked. You know, it's gone from almost 16 down to 1463, and so you know, I hope that illustrated the point that I was trying to make here. It's you don't want to get too caught up in using this as a vehicle to go long or go short the market. And in this case, I think it was important that you guys understand how to spot these divergences, especially when you're trading vehicles that are somewhat correlated. And especially with the VIX, which is a volatility related index in markets that are trending, you know, very hard. This thing can amplify your gains if you're trading it the right way. But when you get into these types of scenarios right here, where there's lots of chop and lots of sideways behavior and activity, and then you start seeing this type of, you know, this type of top forming, you have a very good short signal. And so, you know, in this case, you could have just, you know, kept shorting. Every time it kept popping up to that 16 area, you could have shorted it with a very tight stop. It was a very good risk-reward trade, given the nature of this decline and this inability to take out highs. If you have any questions, I know this is a tough market environment, lots of whipsaws. We're here to help. Email us at admin@tradingsim.com, and feel free to use our TradingSim 7-day free trial. There's really no strings attached. Just sign up and you can get going with the simulation. Especially in these markets, you can go back and you can go replay Monday, you can go replay Friday when the market crashed. It's a really valuable tool. Wish you guys the best.